it's my year, yeah.
All right. Good morning, everybody. Happy Tuesday. This is the morning show on Stock Market TV. You know the drill by now. Good morning to everyone watching us on Twitter. Good morning to everyone watching us on YouTube. If you're watching us here on YouTube, go ahead and hit that like button for me, please. And thank you and appreciate that. Good morning, Brad, Savar, Doug, Donovan, Shay, Joe, Chris. What is up? All right. A lot going on today. A lot to discuss. Busy today. No time to waste. Scott Brown is our guest. I've got a 9. He is from Brown Technical Insights. So let's go. Where's my intro? Start it. Come on.
Hey now.
Hey guys.
Hey now.
Hey now.
Oh,
Missed me yesterday?
No. It was quiet. It was peaceful.
All right.
No, we missed you. The folks missed you. They're like, where's Strazza? Like, who cares?
I know I couldn't even watch. Well, I missed you guys.
All right.
Chat mostly.
So a couple of things that stand out. I continue to get this whole inflation adjusted thing. You know, people are like, well, it's not a bull market until the stock market breaks out above the inflation adjusted former highs. Like, I don't know who's making up these things. Like, none of that is true at all.
But isn't it, even if you adjust for inflation, it got to be at all-time highs still, no?
First of all, let's say hypothetically you're foolish enough to think that it's a good idea to adjust all your charts by inflation. Let's just say, what metric are you even going to use?
One of the M's? No, that's the money supply. The money supply
one.
Use
CPI or whatever. We know it's flawed. It's calculated incorrectly. We know that. The government knows that. They still don't do anything about it. Like, we know it's calculated incorrectly. So you're just going to arbitrarily divide all of your numerators by a flawed inflation metric? For what? What purpose does that serve? That's number one. Number two, if you're going to adjust the numerator for inflation, you also need to adjust the denominator for inflation. And I'm no math major here, but don't they just cancel each other out?
Dude, listen, those are terrible.
Any math majors out there? Can you check my math? So if you're going to adjust the denominator, you got to adjust the numerator, right? You got to adjust them both. Isn't it just a wash? No math majors out there want to weigh in. How's my math?
Why are you asking me?
I'm not asking you, Steve Strazza. I'm like asking, it's like the general you, the other Lebowski, the millionaire.
I hate the money supply ones even more.
Well, that's dumb. We know that. So I see it in my timeline, right? Like, you know, I tweet out a chart. It's like, well, it's not inflation adjusted. It's like by design, right? Because that's dumb, right? Let me ask you this. So for investors who are not adjusting all of their charts for inflation, does that mean we have to give all the profits back from the bull market that's 18 months old?
Well, I think that's the main point why you don't do that. Like you make a great point about this all the time. We're talking about price to earnings or adjusting price for anything. Why would you take price that tells us so much good information and dilute it with anything, inflation, earnings, whatever?
Could you imagine diluting something as pure and factual as price with something as arbitrary as an earnings estimate?
It doesn't even have to be about, price is pure and factual. No, it's what pays you. It's how you calculate your P&L price.
Which at the end of the day, if you're investing for any other reason than to make money, you are very confused. You should call 1-800 hotlines and get help. No? Why are you shaking your head, Spencer? Should you be investing for other reasons?
99.99% of investors probably think that way, and there is a tiny sliver that are in this.
Think which way?
Crusade.
Hold on. Think which way?
Think your way.
Oh yeah.
Yeah, but there's a tiny sliver that's in this for like a moral crusade.
Yeah, fine.
And they're lost.
And I wish there were more so that we could take more people's money. Because what those people are doing, they're making donations. So as investors, we can either accept those donations or not. I would rather be on the accepting side of those donations, right?
You can adjust anything for inflation, says a pro. And it's not crazy for some things. Ian does it on the commodity side of things. We do it with gold, sometimes charting the CPI beneath something like inflation expectations or commodities.
I look at 5-year break evens, 10-year break evens relative to CPI, crude oil.
100%.
Yeah.
So there are reasons to have that data. We have it in our systems. We do use it.
Now, how important do you think that we do that, by the way? Where do you put it on the importance scale of all the things we do?
Oh, dude, it's not, I don't think about it.
Right.
I don't think about it.
It's so irrelevant.
It's like gold in another currency for me.
Wow, that's a low blow. That's a low blow. That's bullshit. Wow, you're really gonna hate on that?
It's one of those things that we have fun with, I think, but we don't overthink too much. So you have fun with the gold and other currencies, but you care about gold. You care about gold in US dollars at the end of the day, right? Same thing.
But is that like how you care about the euro in US dollars and you don't care about the euro price in yen, for example?
I really don't care too much about the euro price in yen, to be honest.
Right.
I don't transact in either of those currencies.
Now, in 2008, if you were trading, but you were in diapers, but if you were actually trading in 2008, you would have had the euro yen front and center.
Right. And maybe one day or one cycle in the future, that will be on my watch list.
If I had to guess, I would say, yeah, probably.
Yeah, we haven't gotten there yet.
All right.
Sorry, old man. Love you.
I used to be a gold bug. What can I tell you? You know, that's why I get to make fun of gold bugs, because I used to be one. You see, I'm a recovering gold bug.
Yep.
Hi, my name is JC Parets, and I am a recovering gold bug.
It's true.
And I appreciate all of you guys helping me throughout these challenging times of recovering through my addiction of denominating everything in gold.
Can we talk about this quick?
Yeah.
I need a gold bug therapist. I told myself that if these trades didn't work, I'm done forever. Done with these things.
That's dumb.
About precious metals. I am so sick and tired of this lazy gold chart that just never breaks out. And it's already failed like 5 times at the upper bounds of this range. What do you do when you what do you do? Should I never trade precious metals again? Do you think I would miss them? Would I really be missing out?
Maybe it's your Achilles. Maybe it's your Achilles heel.
Maybe it's my nat gas.
Maybe it's my uranium. No.
Yeah, right. Oh, God.
I've done well with uranium this cycle. It's the last cycle that still hurts. I still got the scars.
Uranium just nuclear in general is such a fascinating place right now. These stocks are being put in ESG indexes. Do you remember talking about uranium?
Did you hear that BlackRock fired 600 of these yahoos that were focused on their ESG department? Oh, God bless them.
Somebody sent me.
It's beautiful. You hire all these people at cheap prices. You scam all of your clients into buying all this garbage ESG nonsense. Like, oh yeah, let's save the planet by losing money in our portfolios. That's a great idea. People actually believe that. Right? I mean, that's real.
Do you remember? Yeah.
I remember it well. And we made fun of them then. We're still making fun of them. They got destroyed. Good. Wall Street made a fortune. And now that the party's over, they fire everybody. Good for them. So good for BlackRock.
When do you think we put that report out? That'd be like 3 years ago now, right?
We should have kept putting it out.
Yeah. So I had a lot of fun researching that. Like we did a nice little deep dive. And back then it was in the post. We could go find it. It was in the report. It was their director who led the ESG division, who had left years ago, and he was the first one to start calling bullshit when it was not.
Can you imagine thinking that it's good for the company to have like an additional female on the board of directors, or like maybe like an additional like non-white guy? Like, how is that going to help the bottom line?
Listen,
like, hire the best person. If the best person is female, hire the female. If the best person is male, hire the male. If the best person is from Africa or from Texas or from Canada, or who cares? Who gives a shit? Just hire the best person.
I couldn't
like,
agree
why? Like, why is that so hard?
It's a tough topic. It's a thing in corporate America. Trust me. I worked at Deloitte. Anybody else?
If you are a publicly traded company, your priority is to your shareholders, not to your employees or to some random, whatever. Like, your job is to put the best people to work to make the most money, not like overthink diversity or whatever. I have no problem with diversity if that person is the better person and that person just happens to be a white guy or a female or a transgender or a black guy or an Indian girl. Who cares?
Listen.
Who cares?
All right, I'm reeling this back in. I'm
No.
reeling. This is me. This is me.
Yeah, but I got a good one on this, Spencer, because JC's right, and that's the way they taught it to us when we were in business school. It's about shareholders. There's a modern school of thought, though, and this is a fun argument. I don't really think it matters. It's more philosophical than anything, but they've changed that. And I don't know, Spencer, how much younger are you than me, Spencer? There's
a couple of years, 1 or 2 years.
So then you were taught about shareholders and shareholder value too. There's been a big push and a change in the past decade or two towards stakeholders. That's how they changed that, JC. It goes from we look out for shareholders, we're stewards to the shareholders, to, oh, but there's other stakeholders. What about the employees? What if they're not shareholders? What about the customers, right? What about broader society?
They don't matter. Shareholders matter.
I know. I'm just explaining
and
that.
The companies that don't put their shareholders first get penalized by investors.
Sam Biggles just said it. Dude, that's the way they teach it now. There's like two schools of thought. It's not just all about shareholders. It's stakeholders
That's
too.
dumb.
I think
That's like adjusting your charts for inflation. Can we talk about the markets, please?
That's what I'm trying to do.
Come on, Spencer. You got to do a better job of reeling us back in.
Oh my
Come
goodness.
on, Spencer. All right, let's go a quick little rundown. Dow futures down 170 points, about 50 basis points. S&P futures the same, down 25 handles, about 50 bips. NASDAQ futures down 80 basis points. Bond futures down again, 30 basis points as, the Qs and bond futures continue to trade together. Gold and silver slightly up today. Copper flat. Oil up 2.5%. Dollar mixed in the morning trading here. Volatility index inching slightly higher, right around 13.5 on the VIX, as yields inch higher, holding just above 4%. And of course, in the old funny money, we've got a big day for Bitcoin yesterday. Monster move, big breakout is what it looks like here. Let me here we go. So Bitcoin down today 340 points, holding up there 46,600 for Bitcoin. Ethereum down close to 3%, about 2270. And on the old Solana, Solana this morning actually up on the day above 100 with a total crypto market cap at 1.67 trillion, continuing to get higher. Bitcoin dominance continues to deteriorate. The things that we talk about a lot is that in that first leg higher, you tend to see in these crypto cycles, Bitcoin's the big winner off the bat. And then in the second, third innings, you start to see rotation into some of these altcoins. Exactly what we've been seeing.
Yeah, that's exactly it.
How about that?
I have nothing more to add. Strazza has been waiting on Ethereum, but the market's moved on to Doge and Sheeb and whatever else is stretch your fancy. So
I think these cryptos are done falling.
Like a year and a half ago, bro.
No.
Thanks for coming.
No, they've been correcting, right, for a little bit now. Did you see tech stocks yesterday?
Yes.
Wow.
Can we get to it? I have it in my state of the markets here. Let's throw the first day.
Video yesterday.
First 5 days of the year closed up yesterday, actually down for the S&P 500. So for the Santa Claus rally, S&P 500 was down for the first 5 days of the year. S&P 500 was down. The Dow actually was up during the Santa Claus rally, and the Dow was essentially flat on the first 5 days. So that's an interesting dynamic there that I want to point out. I'm just not seeing that extreme defensive rotation, at least not yet, to be fair. Anything can happen today or for the rest of the month. Still not seeing it. Healthcare can be defensive or not. Utilities, I would argue, lean more defensive, and staples, certainly, of all of them, definitely lean the most defensive. What I would not classify as defensive is financials. Financials outperforming almost everything in this environment, and communications outperforming as well. So I'm just not seeing the defensive trade really develop yet. I'm watching staples. Staples continue to flirt with some interesting levels, and that's the one for me. Healthcare. We've seen healthcare outperform in bull markets. We've seen utilities outperforming in bull markets. It's consumer staples that don't outperform in bull markets. They tend to underperform dramatically. So while the other ones might lean defensive, they're not as pure of a defensive trade as consumer staples. Consumer staples underperforming financials, to me, that's really not that defensive. So anyway, just wanted to point that out. Now let's get into the technology trade that Strazza was talking about. You got 20% of the semiconductors index yesterday, making a new all-time high. Spencer, you want to throw that up? So these are the Fibonacci extension levels. Spencer, can you drop the Fibonacci for those interested? You know, people are like, "Well, JC, where did these lines come from?" Here, I'm going to drop it in the in our chat here.
Did you guys talk about CES yesterday?
No, it didn't. You know, it didn't come up. It starts today.
Can you? I thought you were talking about a stock. Shows you how much I know about this stuff. Can you drop that link for those of you who are interested in these calculations, these Fibonacci calculations? You can go ahead and read on that there on the link that Spencer's dropping. This is Nvidia breaking out above 500. That's been the key level. The trade is on. I think you got 50% of upside here, but also go to the next one, and this is the bigger one. Look at this, man. Especially the last 10 years. Come on, Strazza.
It's beautiful. I know. It's great.
Right?
My entry into this world of investing pretty much coincided with that 2015 low right there. That little dip, that little low, right before the rip. So you're welcome, everyone.
Nvidia continues to crush. Outperformance out of semiconductors, outperformance out of Nvidia. New all-time highs for Nvidia just does not strike me as something that's bearish. Go to the next chart there. And that's what we see here. See, you know, we talked about the 5 charts. What is it? The 5 before the nosedive, right? If there's 5 charts, semiconductors, industrials, technology, home builders, broker dealers, those 5. If those 5 indexes are above their late 21 highs, it's really, really difficult to be overly pessimistic in this market. And with semiconductors holding on to their breakout, Nvidia now breaking out to new all-time highs, I just don't see an environment where it makes sense to be overly bearish, right, Strazza?
Yeah. Let's see the other ones get there, though. Like, it's the leader. It continues to be the leader. The other ones are still, for the most part, I'm just flipping through all the SOX components now. They're still trapped below those pivot highs. I think they follow, but that's what we want to see next. Yeah, the leaders are going.
And then go to the next chart there, Spencer. You know, Berkshire Hathaway is the largest component of the U.S. financials index.
I want to talk about financials. I love this. So
hold on. So Berkshire Hathaway is the largest component of the financials index. So Berkshire Hathaway is a lot of things. If you X out Berkshire Hathaway, which I do it respectfully to Uncle Warren, rest in peace, Charlie Munger, and you look at more pure play financials, because Berkshire's a lot of things.
It's not a financial, but yeah.
Well, it's the largest component of the financials index, so, you know.
Yeah, whatever.
One can argue it's a financial. Anyway, X Berkshire, JP Morgan is the largest component of the financials index, almost 10% of the index, making new all-time highs.
Yeah.
How do you feel about that?
So,
bearish?
How do I feel? We put trades on JPM and Citigroup yesterday.
And forget yesterday, over the last several months, the ongoing joke in all our meetings, not a joke, it's serious, is that we don't own enough banks. Remember? Every meeting, it's like, dude, we don't own enough banks. We don't own enough banks.
And if you really, the easiest way to see, like what JC's saying, like, why do we like them so much? Go look at any other index you want, right? Stocks peaked internally December 14th and the index level about December 28th, 29th at the end of the year, right? And then go look at XLF and look what it's done over that time frame. It keeps hitting new all-time highs.
We had a stool pigeon in our show yesterday who was telling us that it's all we do is talk and we don't talk about trades, and not once have we mentioned buying financials. And I just ripped into him, and
who said that?
It was pretty funny.
Who said that?
He's not welcome here anymore.
Someone in the chat. Don't worry about it.
Yeah. Don't worry about it. No one who matters in this world.
What did I miss?
You know how there's people in this world that we could just shun because they've proven that the world is a better place without them in it.
What?
This person is one of those.
I'm gone for one day. What happened?
Nothing happened. It's not a big deal. Somebody said something stupid. I abused them, and we all moved on.
In the chat.
Yeah.
Oh yeah.
Yeah, it's not a big deal.
Yeah,
It's just another day. No big deal. No
Yeah.
big deal. Can we throw up, speaking of big deal, can we throw up the broker dealers?
Please.
This is one of the, what did we call it? The Fantastic Five? The Fab Five?
Fab Five.
So with JP Morgan breaking out to new all-time highs, by the way, JP Morgan not a component of this particular index, which is interesting, but we can group them together because we're big boys here.
Did you say XLF was at all-time highs?
No.
No one said that, Brant. Go on.
Nobody said that. Who said that?
Go on.
The broker dealers index making new all-time highs.
XBD. This is the NYSE ARCA broker dealer index. The NYSE ARCA collection of indexes are really great.
They really are.
Yep.
The NYSE technology index also includes some of those stocks that the S&P does not.
Yep. They got an ADR index. A lot of good stuff over there.
Yeah, Brian is talking about the XLF. We said it's making new all-time highs. No, we never did.
No, not yet.
So it's still below. It's not yet. I do think it does.
And I think
it's coming.
Yeah. To that point, I don't think sometimes you'll say all-time high and you mean like on a weekly closing basis. But other than that, no, we call all-time highs only when all-time highs, I'm pretty sure.
Yeah, it is making new 52-week highs, if that means anything to you.
Sure, 52-week highs are good because you got to get there before the all-time highs, right?
Well, sometimes you can get there simultaneously, right? Come on now.
And here's the thing.
How it works.
Just to your point about Berkshire, what's awesome about that, and before you eat me alive.
Watch this, Strazza. Ready? Can I please have a Dunkin' Donuts coffee?
Oh, this is good. Hi, Morgan. So the thing about Berkshire that's great too is look at Apple and what it's done. And I know, JC, I know 20, but still 25% of Berkshire is Apple, and Apple's been falling pretty good, and Berkshire's making new highs. So that's awesome. Good for them.
Isn't that part of the rotation? I don't think it's quite 25%. I think it's under 20. But
I did the math before. It maybe 20, 25.
I think your math is flawed. We'll take a look at. I think it's under 20. But anyway, not the point. You're right. Your point remains the same. That despite the underperformance of Apple recently, the insurance, the financials, the industrial exposure, the Dairy Queen exposure, has really lifted that Berkshire Hathaway.
Yeah. All right.
Financials, new 52-week highs. How about that, Brant? Is that good? Are we good? Are we cool? We can still be friends.
Guys, is this setup with these Bitcoin ETFs? I don't know if I've ever heard people obsess about something so much. I mean, this is all anybody wants to talk about in crypto.
It's a small number of people, I think, but small but vocal.
Yeah, it's a small number of people. You're just what does the Perlman say? Surrounding bias,
Really?
Familiarity bias. What is that one?
Man.
That's you. It's oozing out of you.
My IT guy was here the other day asking me about cryptos and talking about.
But your IT guy's always asking you about the market.
I know.
He's a market guy. He's not.
Yeah.
A quote unquote IT guy.
For me, it really seems like I hate this phrase, but maybe the dumb money or retail is really buying this story. And what a perfect setup for a sell the news event. I think it's almost too obvious to have a sell the news event on this. But I don't know. I'm not going to say worried, but I wouldn't be shocked.
What I will say is I could very easily see a short-term sell the news, long-term bullish setup.
Right.
Yeah. I could see that. I'm not making a bet either way. I'm not going to overthink it, but yes, to your point, that is entirely possible for sure. Yep.
Yeah. Anyway, we're supposed to be getting a decision in any day now, any week now. I don't know.
I've been hearing that for quite some time.
I know.
Throw the Wells just to finish up. When you see a company, speaking of bad companies who forgot about their shareholders, I mean, what does it get worse than Wells Fargo? I actually opened a new Wells Fargo account yesterday for other reasons. But
I got a Wells account. Hey, so somebody asked me on Twitter. I have to reply. Because we were buying this the other week, and they made a great point. Hey, you're buying Wells Fargo ahead of earnings? Two things on that. One, these big money center banks, they're low volatility. You're not going to get massive moves off of their reports. And the same is true for a lot of just mega cap quality blue chip names. You want to call Wells Fargo blue chip? You want to argue with that? Fine. So for one, I don't really worry too much for that reason. And then two, think about Q4. Just think about financial conditions in the fourth quarter. These banks are going to have a great quarter. There's going to be awesome reports. I'm so happy to hold some long calls into these reports in Wells Fargo. I think the banks are going to have a monster quarter. I was hoping, and a lot of times you'll see that run up into earnings. You'll see them price that into earnings, ahead of earnings, right? Not quite getting that. So I think out of these coils, you might get some really nice rips on these reports. I'm excited for Friday. What are you laughing at?
What's the chat's funny? You know, we got a great community. Can we just talk about that for a second before we bring in Scott? We have such a great community. I was talking with Josh and Bannock the other day, and we were talking about they're like, oh, JC, where can people find you? You know, what kind of investors, come and look at your research. And we have such a diversified group of readers and on our community, financial advisors, some of the biggest portfolio managers on the planet, new traders just opening up their first options accounts, and everything in between. It's all over the place. And the feedback that we get, the information that we get is so valuable. And Chris Verome was talking about it last week, how, he travels so much and he goes to see customers all the time because that's where he gets such great ideas. And I could not agree more. And it's funny because Josh was like surprised by me saying that. And then he's like, Kathy Wood actually says the same thing. She shares so much information to get the feedback. Honestly, I said it on the podcast, no matter how rich I get, I can't see a situation where I wouldn't be sharing my ideas. And the fact that we make people pony up for those ideas and our research sort of filters out, the clowns that are just, the looky-loos, they're just there to talk shit. People who pony up, even if it's an arbitrary amount of money, it's really nothing. People who pony up to get the research, like they're serious, right? So the feedback in the community that we have are actual investors, people actually doing things, not just like random clowns and trolls, but like real people. And it's so valuable. Like, I don't understand how other people, I guess I'm biased because I've been at this for so long, and people from the outside might not see it that way. But I got to tell you how fortunate we are that we discovered that. All of us, Strazza included, Spencer. Spencer might not know how fortunate he is for that, but trust me, Spencer, you're winning, buddy. You're winning too.
And the people that you meet doing that, sharing your opinions publicly is just incredible. Also, I've been a big fan of Kathy Wood forever. She went from very popular to very hated, very picked on. Dude, she's great. She's
picked
awesome.
on by who?
You were one of them. You were all picking on her in 2022. Everybody. So easy to pick on Kathy Wood. It was
not terrible. Picking on Kathy Wood. We're picking on the stocks that are in those ETFs.
It's her strategy. She's going to outperform the shit in bull markets.
I've never said one bad thing about Kathy Wood in my entire life.
Bullshit.
What have I said about Kathy Wood?
Listen, everybody gave her a tough time in 2022. Spencer,
first of all,
you know it.
She's on the board of directors of the company that I work for. So even if I did hate her, even if I did have something bad to say, I still couldn't say it. So, and I don't have anything bad to say about her. So I don't want to hear this shit.
Sometimes, Steve, she does say things that are like outlandishly wild, right?
Never said anything bad about this woman.
Does, and I love her for that. So does Tom Lee. So do a lot of people. She puts her neck out there. She makes big calls. And guess what? She's right a lot more than she's wrong. So I love her. And I love reading their research. You're right.
I'm pretty sure she's really rich. So
yeah.
I'm pretty sure she doesn't care
she doesn't give a
about
shit.
other people trolling her.
She's good.
Yeah, I got no beef with Kathy. Shout out Kathy, but shout out Tom Lee. I got no beef with Tom Lee either. Good egg, Tom Lee.
I like people who can go out there and make a very aggressive call.
By the way, Tom Lee, when I gave my presentation at the CMT, Spencer was there. This was in December. Tom Lee was there front and center, yelling, like hooting and hollering, telling everybody
I didn't realize
how
it
the
was
tech.
participatory situation. Tom Lee was raising his hand and just shouting shit.
Well, I was also like asking rhetorical questions
that's
and
true.
looking at him and Mark Newton, right? So like I did invite that, and it was all good.
Okay.
Listen, I'd rather it be interactive anyway. So as opposed to me just standing up there and yelling at people for an hour, right? I've done that too. But Tom Lee was talking the entire time about how the technicians nailed 2023. Technicians, everybody needs a technician, like hooting and hollering. It was great. I'm like, preach, brother. Preach.
That was a bull market CMT event. And you're right, Josh. A lot of jealousy. And you know what else? One more thing on Cathie Wood. One of the things she took a lot of shit for was her view on inflation. She's been right. She's being proven right now. So that's
Carter wants us to start having younger CMTs on the show. Hello, Louis, the Fonz.
Yeah, we have them internally.
We have them.
Yeah, I
agree wholeheartedly.
I was thinking
who was
of our
that?
interview with
Carter.
Sam, when we had Sam on. Right
I
after
agree
the
wholeheartedly, and we do that. I agree.
Alfonso's going to start coming on like once a week.
Every Friday.
There you go. One of the younger.
We have Scott Brown here.
All right, bring on Scott.
Woo.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Scott.
Scott Brown in the house.
What's going on, guys?
What's up, man? Dude, that stash is money, bro.
And there's a whole other thing. I was talking about the stash. There's a whole.
I know, but the stash is extra money.
All right, well,
anybody can grow a beard. Even Spencer can grow a beard. But that handlebar situation you got going on there, that is hot right there.
Hold on, we're taking heat in the chat for not having young CMTs on. Scott, aren't you like a freshly minted CMT?
I think he just looks young. You're not that.
Yeah, I'm not. I've had the CMT for what was it, like 6 years or something. I don't think that's too young.
Oh, good for you. I thought you
just looks good. You know, he's aging like a fine wine.
Yeah, but y'all have had some young CMTs. I know some of the young guys. Alfonso, y'all had Larry on like one.
Yeah, Larry Thompson. He's coming on this week also. Louis Sykes. Yeah, because I do think it's important. Carter's right. He may have just missed those segments, but yes, I agree wholeheartedly to have young CMTs on for sure, and some of the oldest CMTs for that matter. Also, if we can get some of these to figure out the technology to come on here, that'd be nice.
There you go.
You should have seen our conversation with Louise Yamada. It was a wild one.
I missed that one, but I do love her. She's awesome.
She's just she's one of the great wonders of the world. Scott Brown, new year, right? January. You had the Santa Claus no show. First 5 days of the year for the S&P down. Does that mean the bull market's canceled? Sell everything?
Yeah, I don't think so. I don't think you can. I mean, I don't think you want to totally ignore those. I mean, certainly. I mean, like that first 5 days indicator, it tests out not that great for the full calendar year. But I think when you consider we're 3 weeks removed from all of those breadth thrusts, those take priority to me. And 6 to 12 months out, it's just very, very hard to bet against the market. So, I like to make fun of, forecasters, and I never get to participate in the outlook kind of season heading into November and December. But because of the timing of all these, in the middle of December, I kind of get to have one. And so again, it's just very, very hard for me to look out 6 to 12 months. We're getting, maybe a little bit of a pullback. You can see in all of those studies, the next 1 month.
When did this one fire? When did this one fire in December? The 1 month highs.
The 1 month high, it was like December, I think 14th.
Yeah, 14th.
Was that 15th? So
14th.
I mean, it's just again, and it's not just one. It's all of these. These are all kind of, I guess, what technicians usually refer to as escape velocity. I mean, you just don't see these types of things at the end of bull market runs. And I think it all lines up with kind of other seasonal things where, again, yes, first 5 days negative, maybe January, we'll see. But the first quarter of year 4 of the presidential cycle is supposed to be weak. It's basically flat on average. I know February is outright negative on average in year 4. So some weakness now makes sense. Q2 a little bit better. There's typically a correction before the election and then rally hard. And, all of that just kind of lines up with, the timing that I see in these studies.
Yeah. We get asked a lot, how do you trust a breadth thrust? And we went back, we've done a lot of work on breadth. And I always tell people, when they just come in like a barrage, like one after the next, and everybody's talking about them because we all have our different breath thrusts, right? When do you know when to trust it? When yours is firing, mine's firing, DeGraff's is firing, all the Wiley stuff, Whaley stuff.
Davis.
Yeah. Everybody's talking about breath thrust. I saw Willie out here the other day talking about breath thrust. That's how you know to trust them. This reminds me of May, June 2020.
Right.
So short term, it's a little bit exhaustive, right?
Yeah.
Like you tend to get some corrections. That's pretty consistent over time when you see these breath thrusts. But when you zoom out, it's early stage stuff, like what Scott's talking about, right?
I love it.
Right. And I mean, look at the indexes. They're they're up a lot in 2023, but they're flat since January of 2021. I mean, that's breaking out. That's a base. I mean, look at so many of these things. I mean, I think it's pretty easy to see a scenario where there's choppiness at the index level, but what you have and why we're having some choppiness is growth already broke out. So it's breaking out and it's doing what often happens after breakout. It's kind of pulling back to support a little bit. And meanwhile, some of those other things are, taking their turn to break out, cyclical value. I certainly think defensives are next, things like healthcare. I've got some, brought a couple slides on that. I think that's an interesting sector for this year, but I think it could be just a lot of rotation. Some things are pulling back while some things are breaking out.
Yeah.
And then maybe everything is sitting above that kind of breakout point as we head into the back half of that year. Maybe it takes till post-election, and then we get another everything rally.
Scott, we talk about how, these indexes are back to their former highs from late 2021, specifically the NASDAQ 100 and the S&P 500. The Dow Jones Industrial Average, which I would argue is the most important stock market index on the planet, is already making new all-time highs, number one. Number two, the technology index, S&P Technology, 30% of the S&P 500, also making new all-time highs and above those former highs. Industrials, which historically have the highest correlation with the S&P 500 of all S&P sectors, also making new all-time highs. Home builders, one could argue one of the most important parts of consumer discretionary. I was told the consumer's dead. Also above those highs, making new all-time highs. The broker-dealers index, again, also above those former highs, making new all-time highs. And finally, semiconductors, led by, of course, NVIDIA, 20% of the semis index, making new all-time highs yesterday. Those five are all above the former highs and the Dow Jones Industrial Average. So what Scott said about, these indexes, maybe S&P and the NASDAQ, kind of struggling to make progress while there's monster rotation underneath the surface and huge winners at the industry group level and at the stock level, I think it's entirely possible, right?
Yeah.
Right, Scott?
Yeah, I definitely think so. I mean, I think you're right. These are all the most important groups. It's new highs. People are always going to find a way to be bearish, but I mean, I think if you look at the trends, it's gotten really hard to make the bear case. Maybe that makes sentiment a little bit aggressive. We saw it get a little bit aggressive, but people are still on edge. People are still seem to be worried. I saw the NAIM number. It got up over 100, and then it had one of its biggest 1 week collapses after the minor pullback.
Well, that one, we know that one is the most erratic of all of them. We know
it's very erratic, but it's also been it gets a little bit high and you have a little bit of choppiness. But when that thing gets super low and people get bearish in it, the market tends to rally.
That's the fund manager positioning survey, right?
Yeah. And if you look, the last two times it's gotten down to 10, it's basically nailed the major bottoms of this last cycle.
Do we have that chart? We'll throw that up.
I didn't bring that one with me, but
we've got it. We've shown it enough times.
Yeah, I know. Scott, what do you like this year?
I think healthcare is really, really interesting. I put out, a report at the beginning of the year. These charts are kind of from the end of the year, but all right, first up, you get a bullish momentum divergence on the relative ratio. And, maybe it's not the most academically thorough study, but healthcare, if you just look over the past decade on a relative basis, it has been just a trend follower's nightmare. It just has this erratic tendency to go straight up and straight down for roughly 12 to 18 months at a time. Well, we're right back at those November of 2021 lows with a bullish divergence. We go to the next slide. It's still an attractive chart. Healthcare doesn't really know about the bear market. It's just been going sideways for 2+ years. When we eventually break out, that base conservatively measures 15 to 20% of upside. ETF investors hate it. If you look at the rolling 3-month outflows, It's basically the worst since COVID. So everybody's just kind of given up on it, throwing in the towel. Nobody cares. Nobody's talking about it. And then the last one, biotech, which has been the worst performing area, been going basically straight down since February of 2021. It just broke out of a monster base. Again, this chart's from the 31st. It went up, pulled back with this correction, and then was up 5% yesterday. Just a perfect retest of that breakout point. So, I mean, I think there's just a lot of things that make healthcare very, very interesting for this year.
Medical devices had their best day out here yesterday since like April of last year.
Yeah, and that's another one that just kind of from a contrarian perspective, it seems like that whole like weight loss drug is going to just destroy the industry and everybody's going to be perfectly healthy and never need surgery or ever have diabetes again. Maybe that just went a little too far.
Well, that was one of the best trades on the books in 2023, and you're seeing like the unwind of it out here since, just for the past few months. But everybody was long the GLP-1 names and then short the basket of stocks that were supposed to suffer from it. I think you get more of an unwind here.
Yeah, for sure.
Scott, can you Ryan Dietrich's good friend of ours, friend of mine for a long time. You guys worked together for how long did you guys work together?
We were at LPL for about 6 years, and a good 4 of those, he was actually like my boss.
Oh, wow. Awesome.
And did you guys do more drinking or charting?
We probably did more charting, but Ryan knows how to put back a few, and he also knows how to enjoy a good meal.
Good amount of health.
This was like 10 years ago, and me and Brian are at a bar, and I was like, "Oh, you want to get a beer? Do you want to get an old fashioned? Like, what are you thinking?" He's like, "I'm just trying to get drunk."
That sounds about right.
This was a long time ago. Love Ryan Dietrich. What were some of the things, going into that experience with Ryan and LPL and then coming out of it, right? Starting your own shop, what were some of the things that you learned that really stood out from that experience?
Oh man. Ryan was hugely influential with a lot of his things because he looked at things a little bit differently than me. Taught me how to run like all these seasonal studies and things like that. And they're really testing things out. Ryan gets a lot of hate on Twitter for just putting out facts. I think that's always just hilarious. He just runs the numbers on here's what's happened, and people get really upset when it's, bullish 6 to 12 months out. But I think that kind of having, Ryan's got good intuition, but I think testing things out is always very, very important. But overall, it was a great experience just because, I not only had like Ryan working in the office with him, but we subscribed to a lot of great technical research. I read Chris Barone and Todd Sohn's strategic reports every day for like 3 or 4 years.
Those guys are killer.
I mean,
good.
The epitome of just professional. Those guys are pros, man. So I mean, just reading how, they interact, they walk through corrections and things like that was, hugely influential and important. The things that they're looking at was really, really important. I think it's really helped me kind of being up on my own. I've been doing this for, 10 years, but, you can study history and you can follow people that have been doing it longer. And I think make your experience longer than you might have actually been doing it.
Yep. It's great advice. And Strategas shout out. Everybody was watching. It was Strategas week here last week on the morning show. So we have both Chris and Todd on. Go back and watch those interviews.
I'll have to check that. I was on vacation last week, but I think I saw
Chris Barone and I agreed way too much. I didn't like it.
Yeah,
oh yeah. All right. Well, I mean, there's worse people to have.
You know who loves healthcare? Chris Barone.
Yeah.
Oh, I hadn't seen that. All right. Well,
a lot of these guys.
Everybody, healthcare was the best performing sector last week, so everybody loves healthcare right now.
By the way, again, there's what they say and what they do. And when you look at positioning, Deutsche Bank just came out with a study. Yes, Deutsche Bank still exists. Deutsche Bank came out with a study that about the positioning of healthcare, and it is at washout levels. Nobody owns it.
I think, that's what the ETF flow is. Just people giving up on it. Nobody's, and that's.
I like that. And then when you look at the XLV chart,
a way to like kind of come into the election year narrative, whether it's good or whether it's going to be good or whether it's going to be bad, and it always does the opposite of what people think.
It's a beautiful thing. It's beautiful. What about these sell side? What about these sell side analysts? Year-end targets about 1.5% gain for the S&P 500. You want to take the over or the under?
Yeah, I'm gonna take the over. All the things we're talking about, maybe it's a little bit choppy for a little bit, but I'm definitely gonna take the over. I think they're gonna have to ratchet it up. I mean, I think contrarian indicator Hall of Fame was last year. The average target was negative. I mean, I've worked at these shops. I know how it works. You might be, if you're super bearish, you're forecasting flat returns, right? Like to forecast negative returns when your clients and investor base, you want to invest in equities. It's just hard to do. And there's a reason it had never happened in
Could you
23
imagine
years.
being a customer of Morgan Stanley? Could you imagine, or worse, being a financial advisor at Morgan Stanley and being like, yeah, this is not a bull market. No way. Even
Right.
though, we're
going
going to
down,
ignore
ignore it.
reality and close our eyes and pretend it goes away. And, imagine.
Yeah. I mean, if you've actually been positioned like that target would imply, you've hugely missed out. I mean, to
For the
forecast
record,
negative
you have the
returns,
data. The institutions have been positioned that way.
right? Yeah, and 54% gain of the Nasdaq 100 last year. Like that's not a little bit of a miss, but I mean it's that and this was hugely influential into me becoming a technician. Was 2013 into 2014 when it was 63 out of 63 economists predicting interest rates were going to rise that year, and they peaked first day of that year and just fell straight down. And that was literally, to me, that was
I
like
remember that.
because that was early in my career. It was, they all think interest rates are going to rise. Interest rates are obviously going to rise. They can't all be wrong. Like
You learned how it worked very quickly.
and you're like, oh no, that's the reason they are going to fall. And I was watching technicians like, well, they're going down now. And by the time we got to, June or July, I was like, all right, let's buy REITs, let's buy staples, let's buy long-term bonds, and it just continued to pay. And
These economists take a long time to admit that they're wrong.
Oh yeah,
if they do it all.
And they're just more right when you're fundamental and you're just getting farther away from target. They just double down and double down. And when they eventually throw in the towel, that's how you usually know the trend.
I've got a good question for you, because I've been having this conversation a lot recently, because we've been talking about what you just discussed about how coming into 2023, sell-side strategists had a negative outlook. This year is basically a flat outlook. So it's been in conversation. And a question that we get a lot is how these people keep their jobs. My argument is that the reason they're wrong so much is because they're trying to keep their jobs, not because they're not trying to help investors. They're trying to make sure they keep their job because, little Timmy's private school is more important than, going out on the limb and saying how you really feel. Martha's wife, Martha, her country club membership and her tennis lessons are more important than the investors, right? So it is about job security. That is why they're wrong. How close am I?
I think there's definitely some of that. It sounds a lot smarter to rationalize while everyone else is wrong, rather than just quickly change your view and to say, I think stocks are going up today, and then you come back the next week later and you go, I don't really think that anymore. That's how you really need to operate if you're going to tactically invest portfolios. But from the outside looking in, to people not familiar with finance and markets, it may not sound sophisticated. And sounding sophisticated is the job.
And in the old days, they would make things sound more complicated than they were, so that the clients would pick up the phone and call in and ask questions, and then they would get the trade, right? So that was a strategy to overcomplicate things. And even though it doesn't work that way anymore, you still see that overcomplication, right? You still see that for no reason.
Yeah, definitely. Yeah. But I was literally on the ski slopes and I heard somebody we had a huge snow day when we weren't supposed to. And somebody's like, the only job where you can, be wrong every single day and keep your job as a weatherman. And I just kind of sat there. I'm like, there's one more job. I've seen it happen.
That's right. That's right. Are you adjusting your charts for inflation, or are you looking at price only?
I saw you tweet about that. I have not done that. I haven't seen my bank account start adjusting for inflation either.
What metric would you even use, out of curiosity?
Shadow stats, man. Shadow stats. Everything, all the money you made last year is just a mirage.
And then if you're going to adjust the numerator for inflation, shouldn't you also adjust the denominator? And check my math, but don't that cancel each other out?
You would think, but hey, we're not here to be academically robust.
I'm not a math major. Somebody check my math. I don't know.
Yeah, I'm pretty sure that inflation wasn't 54%. So if you were long growth stocks last year, I'm pretty sure you came out on top.
Tell them, Scott. Tell them, baby. What do you think, Spencer Israel? Are you here to kick him out? Fun Police is here.
I'm just here to keep the trains moving on time. Wait, Scott, did we get through all your charts?
Let's see. What did we get through?
You know how many charts Scott has? We can do this all day, bro. Come on,
Yeah.
Spencer. You know who you're talking to here?
Yeah, I saw that I pulled up my deck from last time and you sent 5, but you didn't email me this time. So I was like, I'm bringing more than 5. I think the only other one that I put, we talked about breadth thrust. If I just added a new section of my Monday report, just the key level to watch. I'm more about trends. The more I've done this, the more I've learned that trends over levels, but damn, people love levels to watch. And I think 4.09% on the 10-year yield is a really key level to watch.
Yeah.
Towards the end of this week, especially when we got CPI and PPI, we had that supposedly hot jobs report last week, ran right up into it early in the morning, closed about 5 basis points down. We're trading still below that this morning. I think this trend has turned, and I think, resistance levels should kind of hold in downtrends if it's turned. And so I think if we hold under that, equities can probably continue to rally from here. If we do break up, we risk 4.35% and maybe some more equity market weakness. But I know you guys have been talking. That is one interesting thing. For as much as we seem to have gotten past the whole, Fed and inflation and people want to be done with it, stocks and bonds are still very much correlated. So while I'm bullish equities and I'm bullish bonds over the course of the year, I think for tactical risk to equities, yields are still the thing. That yields in the dollar are still going to be the thing that cause hiccups. And if we do push up through 4.09%, I might expect some more weakness here in January.
How long can these stocks and bonds stay correlated? I'm not going to hold you to it. It's just kind of a philosophical question. Could this last years or a decade, or is this just a quarter or two?
Who cares? I've learned that it's not important to try and
how am I
supposed to be accountable to 10 years from now and look back and
do you think it's possible? You think it's possible?
Anything's possible in finance. Sure. People definitely don't expect it. So I definitely think it's possible. You look at the rolling correlations now we saw kind of a flashback to the old era in the regional bank crisis, and then they went right back to a positive correlation. And so until I see that change in the data.
So the bet is
that's the environment.
The correlation remains the same. Whether stocks are going up or down, that correlation remains positive with bonds until proven otherwise.
I think so. I mean, I'm sympathetic to the argument of, we'll eventually get this recession that will, stocks will go
one
down.
day. Sure.
Sure. But it isn't happening yet.
That's right.
Scott,
That's right.
Both interest rates and the dollar continue to have a huge impact on the prices of risk assets. You just brought up the 10-year. Do you have one that's more important, yields or dollars, or are you weighing them both equally? How are you looking at that?
I look at yields a little bit more just because I think the dollar, it kind of comes down to interest rate differentials and things like that. And you've got, the dollar index is a little bit quirky. You got a lot of euro and you look at other things. So I tend to look more at rates, but they're obviously both important.
Cool.
All right. Guys.
I'll finish up with this, Scott. I think that the correlation between stocks and bonds can change, certainly. But my bet is that the negative correlation between the dollar and stocks will remain in place, even if that stocks-bonds relationship changes. The reliable one, even before the correlations between stocks and bonds changed, has been that negative correlation with the dollar, right? So that's been more consistent longer.
I think that's fair. Like I said, but to me, it's a little bit of a relative game. But hey, U.S. stocks are such a huge part of the overall global market cap that, it makes sense that kind of we might need the dollar weakness for our companies, and, how our equities act is more important for the globe overall.
Yep.
All right, guys. Scott Brown, the link to his research and Twitter, both in the description at Scott Charts on Twitter. It's on the screen as well. And always a pleasure, sir. Thanks for coming on.
Thanks for having me, guys.
Adios.
All right. How do I get you out of here, Scott? There we go. Okay. 9:25 here. Hey, we got a lot to discuss here. Still, I know Steve had some things he wanted to get off his chest. So why don't we rip through some headlines and movers, and then we'll get to do a little Strazza spotlight. It's been a while since we've done a Strazza spotlight. We'll do one in a little bit, but what's moving today? Let's see. First, can we bring up the chart of either Juniper or HP? Don't really care which one. HP Enterprises, HPE, not HP.
HPE.
HPE is reported to be acquiring Juniper Networks.
Really?
A pretty healthy premium. The deal would value Juniper at about $13 billion. That's about $40 a share. As far as the stock goes, so we're at I think 36 right now.
Yeah, wow.
So
Big move.
Bit of a healthy discount being priced in there. But anyway, Juniper going off the board. It seems like I said, $13 billion deal for HP as they try to beef up their AI and networking infrastructure there. That was kind of the big deal announced.
Juniper has done nothing for 20 years.
Yes, that's correct. Do we? I think we have the Juniper chart too, right? Can we?
I got it. I'll throw it up.
I think we do.
Throw up slide 2 here. I haven't even seen any other charts that we have on Juniper, but this one shows my point. Look at that. Just nothing for 20 years, bro. Nothing. And then it gets taken out at a 10-year high.
Yeah.
Nice.
Like I said.
Nice.
So yeah, around $40 would be somewhere in that neighborhood would be the takeover price here. For Juniper, we had another deal announced. More biotechs every day with these things.
Every day with these things.
Novartis is acquiring Cytokinetics, CYTK. That CYTK chart is wild. First of all, they had some good data out like a couple of weeks ago, which is why the chart looks like it looks like someone knew about this before, but in the actuality, it was just because they had some good data out. I think the end of the year, end of the year, I think. Anyway, this stock has gone from 40 now it's at 108 in like 2 weeks. So that's what happens in biotech land. Crazy things. So NVS again taking over CYTK. What else did I have on the headline front? I missed this yesterday. It happened during the show, which is maybe why. But Twilio, new CEO got getting pushed out as Twilio. I didn't see it until this morning. So Jeff Lawson, who I believe is also the founder, one of the founders of Twilio, is stepping down, and kind of a big deal since he
happens.
Yeah,
this biotech M&A, we've been talking about it. We're talking about it in the hot corner for months now. More is coming. The oil and gas M&A, we've been talking about. I'm talking about it for months. More is coming.
What about banks?
It's coming.
We haven't seen it really.
And also, think about the deal making that's finally starting to tick up. Dude, these banks are going to kill it. I think these banks are just going to have such a great year. Financial conditions are perfect for these banks, and they're as cheap as they get.
And nobody thinks the banks go higher, so that's good enough for me.
I think we're going to learn a lot on Friday. Did you do
my God. What is Friday? Tell me why we're going to learn so much
earnings,
on Friday.
JC.
What's Friday?
Wells City and what's the other one?
Do they actually even have any earnings?
Yeah.
Really good too. So the analysts who are always behind are all trying to get their upgrades in now ahead of earnings. So did you see, where's that screenshot I dropped in?
Oh, well, I mean, this whole week, this week and last week, obviously, really since the new year, it's been analysts
coming.
It's been a ratings bonanza.
Okay. So this is just today in upgrades. Citigroup, buy at HSBC. Interactive, buy at Goldman. JPM, buy at Deutsche Bank. KeyCorp, Northern Trust, Regions, buy at Jefferies. There were also some initiations.
Well, Jefferies reported yesterday, so that's why.
Talking about the upgrades. What are you talking about? Huh? Jefferies upgraded them.
Jefferies
KeyCorp
had earnings yesterday.
I know. I'm talking about upgrades.
Okay.
Some other ones in initiation. Okay, that's it for the banks. Actually, can we talk about the DraftKings upgrade?
Yeah, I have one more news thing. One more news thing. Match Group. There is a $1 billion stake has been taken by Elliott the activist hedge fund.
Yeah.
They tend to always get what they want when they take stakes like this, whether it doesn't matter who the target is, they tend to always win. So they're going to be pushing for something.
Aren't they in Pinterest
that's what
too?
they do.
Dude, they're doing a lot in tech. Good for them. This is Paul Singer and Elliott Management.
Yep.
The guys in Pinterest also. Throw this up, please, Fonz, because I think the point here, JC is going to love it. These patterns, these bear traps keep working. The worst and weakest stocks, it's failed breakdown city. These are so tradable. You see it in Match today. It's trading up here in the, 40s? What's it at right now? We don't have today's data. What's it, up 15%?
It's up 10% today.
Keep working. These patterns. The JC special.
My third book is going to be all about this.
He calls it the scoop and get some.
No, I've never said those words ever. Scoop and get some? Do I say dumb shit like that? I'm pretty sure I do not. You are the king of dumb shit. That sounds like something you would say.
The shake and rally.
Nope, never said that either. Nope. This is just a whipsaw. No big deal. Classic. From
Bear
failed moves come fast moves in the opposite direction. Shout out Brian Shannon. Also, Brian Shannon does not say stupid things.
Bear trap. Bull hook. Scoop and score. Scoop and score.
Now, those last three sound more like me. Yes.
You know, the names are fun. I think the names are fun.
I think you're having way too much fun with these names.
Well,
Why don't we focus on the implications? And the implications are Van pa arriba.
yeah, great. Can we do DraftKings now?
Yes.
Please.
Wait, I'm sorry. Is this the official Strazza spotlight?
No, I got a lot to say today. I missed
Oh,
yesterday.
wait, hit the bumper. Hit the bumper, Spencer.
No, this isn't it. No.
Okay, fine.
the
Then
bumper.
I won't do it. What do you got?
All right, so DraftKings made a top pick at Morgan, along with Las Vegas Sands. The bullish
yes.
gambling. But so I looked through the note this morning, and I took out a little excerpt that I want to read. We've talked a lot about DraftKings. It's been one of our favorites since last year. DraftKings poised for a material ramp up in profitability in 2024 as new states are launched. A national marketing approach is refined. Price target 40. Have you heard this story before, Spencer, about the states?
Yeah, it's the only story.
Analysts were slow to get on this, but now they're starting to talk more and more about it. This is such a beautiful story stock right now. And I use the phrase story stock because that's still what it is. The fundamentals are good. They've been really good. These guys are like doubling their revenues and earnings every couple of quarters. I love it. But the bigger secular growth story is in entering the four biggest states: New York, California, Florida, and Texas. If that happens, look out. The reason it's still a story stock, and it's an exciting story stock, it's one of my favorites. I was telling Spencer this morning, we're going to do like a Strazza top picks thing. This is one of them. I own it in my long-term account. I've been trading it all of last year. Really bullish. But now this year, it's time to see that story come through in the fundamentals. Like Uber was a story stock a few years ago. And then everything that they were saying on their calls, saying that they were going to do, talking about all this growth that was coming, you started to see it in the earnings reports. And now look at the stock. DraftKings is still at that point where they're talking about it. It sounds great. Now we need to see it. So this is one that I'll be listening to all their earnings calls. I'll be following it really closely if they do start to enter these states. And then they do start to see some really extra revenue growth from those states, right? It's one thing to just enter them. Are people then going to switch over? For example, I'm in one of these states. I have an app right now, the Hard Rock Seminole one. It's the only one we could use. Ideally, DraftKings does enter in the next couple of years. Do people switch? Now we need to see that start to hit, their income statement. If that happens, this one is as exciting as it gets. And analysts are getting super bullish on it. So top pick, I think DraftKings is a really, really bullish story right now. Love it.
All right. I have nothing more to add. I guess in a name like this, I just kind of let the chart guide me. Obviously, it was such a huge winner after the IPO or after the SPAC, whatever.
And here's the point I'm trying to make. If they go on to do what they've been telling us they're going to do, there's so much more in the tank for this one. We're going to be talking about this
The one thing that's hard for me to get behind with not just DraftKings, but the whole space is the customer acquisition costs are
conversion
so high that I don't know how they bring that down.
But you don't need to think that hard. Stop. Did you hear what I just said? They're talking a big game. They have this incredibly bullish story. We'll see it. If they're right about that story and they're going to get that customer conversion, right, as they enter these new places, it's going to show in the numbers. It's going to show right there on the top line. They're going to be pounding the table about it, right, on their earnings calls. We'll know. So that's when, if you're not in it now, that's the way to play this one. Because then once that really starts happening, there's going to be a lot left in this. This is going to be a massive grower, and you won't feel like you missed anything, right? If you enter it in an environment where they start to realize this bullish story, I think it's just huge opportunity here in these markets, these big states. Gambling, this is advice.
Are you just talking your book, Strazza?
Yeah. Okay. Who else's book should I talk?
Just asking.
This is our book. We've been very bullish this stock at all-star charts. Yeah.
Just saying. I don't know who else's book you need to talk. I would be talking my own book. I don't own DraftKings.
Okay.
Maybe I should.
I like it right here. I woke up this morning, saw that, read the report, and I started asking myself, do I own enough? And if the answer to that question is no, is this a good place to buy more? 34 is that level. This is one of those tops that looks like it completed, and it probably just, hooks higher from here, goes on to hit our next target. So 34 and change, those pivot lows. Let's see.
I like it. I like where your head is at here. And it also looks like a lot of other names that have been working, right? So it's not like it's coming out of left field. This is a pattern that's been working.
Yep. Throw up KeyCorp.
Speaking of patterns that have been working.
All right, so this is one of the ones that just got upgraded. Why do we like this? So look at what this stock has done off of the October lows, right? Just shown on the right-hand side of the screen here with all these blue coils drawn up. Coils, rips, and look at this coil. Now that it's back in this little memory gap, this little gap zone, long coil here. Earnings season coming up. A couple of the banks come out and report Friday. Key reports, I think Thursday of next week. Why would this one resolve in a fashion any different from the last couple of coils, JC? I love this setup.
Yeah, I mean, listen, our ongoing joke, funny, not funny, is that we have been saying we just don't have enough exposure to bank stocks. I mean, and like, I know Sean well, obviously, and I'm like, Sean, let me ask you this. Are you feeling like you don't own enough banks? He's like, yes. And this was like months ago. Like we're all on the same page here. So, and does this look that different than DraftKings? It's a similar situation. These patterns are working in different sectors.
Yeah, they are. It's what you're saying is the base is completed and it's in a continuation pattern. Yeah, and that way it's just like DraftKings. And we're seeing so much of this. And they keep resolving in the direction of the underlying trend, which once the base is completed is higher. You want to do my spotlight?
Please.
Yeah.
So handsome that bumper.
I have a great bumper. All right,
you do have a good bumper. You do.
I think you're gonna like this. So
I better.
I'm just gonna state the facts here, and then I want to hear from you. Throw up the first Snapchat chart. Wow. So don't buy it. It's extended, right? Some of the textbooks, TA textbooks, will teach you that something like momentum indicator like RSI should be used in a counter trend fashion. We tend to disagree with that at All Star Charts. If you bought Snapchat when it first got overbought back in November, I think this was November 3rd, shown with the green circle here, you would have made about 60% to its last day being overbought, which I believe was the last day of the year. It's circled in red up there, December 29th. This rallied 60%, JC, from the moment it got overbought to the moment it fell out of overbought. I don't think in uptrends and in bull markets, you want to be afraid of overbought readings. This is not the only one. It is one of the most extreme examples. We've been running RSI streak indicators internally now for 2 months. We have a little watch list of these names that had just epic overbought streaks that we kind of tucked away. And then Snapchat fell out of overbought territory for 5 days, mind you, corrected a little bit. And look at this. All it is, it's the same pattern we're talking about. It's a new uptrend. It's a reversal pattern. And then you got a little coil or short-term continuation. And it sure looks to me that this one is on the verge of breaking out here this week now. So we took that, just incredible momentum. So it was up every day for 2 months, overbought for literally 2 straight months, 38 trading days. Let it cool off, let it digest, let it form a little short-term continuation. This is how and where you want to enter these types of patterns. Now, why do I really, really like this one? Next chart. This is where this little coil is resolving into. We love these volume pockets. Sean especially loves these volume pockets. There's just little to no price memory here. And that's shown by the volume at price over on the left-hand side of the chart. You got the base, you got the reversal, you got that incredible bullish momentum for 2 straight months. Got a little continuation pattern. Now I think we're getting a breakout. This coil I drew a little bit differently. We see this so much. I saw this setting up. I got into it last week. I wish I got into it sooner. I probably should have jumped it when it looked like this little continuation pattern was breaking down. That's that little shake and go. I just love to see it. I can't say enough good things about Snapchat right now. You have an account, JC?
I had an account when I met my wife, and we would actually snap each other.
Would you really?
Yep. I also had a Yo account. Raise your hand if you had a Yo account.
What?
Never heard of it.
Come on. Anybody? Anybody in the chat? Anybody in the chat have a Yo? So it was just an app that you would just press the button, whoever you wanted to Yo, and it would just go, Yo. So like I could go to Strazza and I could Yo you, and it would just go, Yo. Like your
really?
phone. Yep. That's it. That's all it did.
I've never heard of this.
You never had Yo?
Never heard of it.
It was fun for like a week. Come on, nobody in the chat had a Yo account?
Wait, what's that new one? Be Real.
Yeah, I had a Be Real account. I did that for a little bit just to play with the toys.
Yeah.
I had a Be Real. So Be Real, I only learned about it because Saturday Night Live was making fun of it like a while ago. And I was like, I don't even know what they're talking about. I felt so out of the loop. So I got into the Be Real. I actually still have it. I get the alerts all the time where you only have 2 minutes to snap a picture. So it's not like a fake Instagram, how like you set it up and then you filter it. Like you only have 2 minutes and that's it. And not only does it take a picture, it takes 2 pictures, one of what you're looking at and then a reversal. So it takes a picture right back at you. So you can't fake it. Hence, Be Real. And then it alerts you at random times throughout the day. It could be at night, could be in the morning, and you only have 2 minutes. Anyway, none of these things worked, except Snapchat, I guess.
Hey, they like the scoop and get some. It turns out, from a fundamental perspective, if you care about this, the story goes, Spencer, I don't know if you know anything about this. I'm trying to ask my younger friends. Snapchat has figured out a way to monetize. Not with ads, but they're actually charging subscription revenue. I think it's very, very low monthly subscription for some AI Snapchatty service, and all the kids want it. So
Because the kids want it, that's all that matters.
If you need a fundamental driver to get behind this idea I have here, there is a story here. So,
speaking of social media, I was listening to Animal Spirits a couple weeks ago, and they were talking about Instagram. I guess the head of Instagram said that there are more pictures and videos shared on Instagram via DMs than on Instagram stories. So it's just group chats migrating onto different apps, and that's the future of social media. It's just a group. Everything is now a group chat. There's a group chats on.
Young people don't text. They don't text.
Right. Or
talk on Snapchat and Instagram Messenger and the Facebook. Yeah.
And now, how you monetize group chats is beyond me. I have no earthly idea. But that's the way everywhere is going. Everyone's going.
And it's mostly happening on Snapchat, though, from what I understand.
What, group chats?
Yeah, like what used to be texting. They talk to
I
all
know
their friends on
Snapchat has groups. Yeah, everyone wants the group. Facebook went that way years ago with Messenger. That's the whole point. Yeah, Instagram, everything though, like Discord, everyone except for probably Twitter or X, whatever, is going the way of the group chat. So I don't know. That seems to be the
Can we do a group chat about the hot corner? Because CEO's buying Walgreens.
Yeah, go ahead.
Look how excited Strazza is about Walgreens.
He sounds enthusiastic.
So hot right now.
So hot right now.
So CEO of Walgreens filed a Form 4, bought $250,000 worth of stock. Do you care?
No. But this is what you see, right? Happens all the time. A good CEO better be buying stock. You're in the Dow. This is supposed to be a blue chip.
Not for long.
You better be coming out here and buying this stock looking like this. That's a good CEO. So, like, good for him. Doesn't really interest me. At least not yet. I mean, this thing looks... Do we have the chart?
Yes.
I try not to bring charts that look like this even up on my screen because I've broken enough screens.
Open score.
Ugh, gross. Go ahead, buy it then.
I do not own it. I do not own it, but I would not be averse to buying such a thing.
I dare you to buy this stock right now.
I mean, I bought Disney. Was it that different?
Are you still in that?
Yeah.
Garbage. Wow. You still in the Chewy?
Yeah.
You could build a portfolio of these. That would be fun.
What's wrong with the Chewy?
No, Chewy's fine.
Yeah, no. What's wrong with Disney? It's working. I'm making money in both.
They're all the same patterns.
First of all, I own Disney for some personal reasons. It's a hedge against my annual Disney trips after I got the bill from what the last one looked like.
You can't do that every year.
Not only am I doing that every year, my wife is taking my daughter in March, and they're just having a girls' trip to Disney.
Oh boy,
I know.
She liked it that much. Oh, that's awesome.
She's 3.5 years old, bro. Yeah, she knows every Disney princess. She knows every character of every movie. Like, it's insane. So her like, she's just hanging out with Elsa, having breakfast with Sleeping Beauty. Like, her fucking head's exploding. Like, she loves it, man.
I love that. Hey, I just got, speaking of Chewy, a new ottoman/cat perch. They love it. So I can sit on my couch and put my feet up on it. It's like and it's a nice looking piece of furniture. But then it also has like a little compartment that the kitties just love to get in. And then they're close to you, but they're not too close to you, but they're like in the perch and your feet are up on it. It's the best stuff. Go Chewy.
How did we get out of this conversation? I don't even know.
Talking about scooping scores and JC's portfolio, Disney,
yeah.
Chewy, Walgreens.
I don't own fucking Walgreens.
Buying Walgreens today. No.
Anyway,
I'll buy Walgreens when the day they kick it out of the Dow. I'll buy that dip, and that's the signal. It's coming.
It's coming. You better.
We're gonna wake up one morning, and we're gonna be like, "Oh shit, Walgreens is out of the Dow," and then mostly we're gonna be like, "Wait a minute, Walgreens was in the Dow."
What else?
If you want if you guys want the hot corner, get it every day for free. The link is in the description. Link is in the chat. I just dropped it there.
It's a great list.
Great list of all the top insider buys from CEOs, hedge funds, Congress people, et cetera, et cetera, et cetera. Okay.
Do we have a Patrick today?
We do have Patrick
today.
We have
a Patrick.
Good.
We have one of the Patricks.
There is only one. The Patrick. There's only one Patrick.
Yes.
There's only one Patrick that matters.
We talked about everything. We got all the news. Why don't you do the Boeing thing, Spencer? That's
dude.
You did it yesterday, bro. Listen,
you did?
Not all of us took the day off, right? Some of us are working here, so thanks for coming. We even talked about like aerospace and defense, how strong it is despite its largest component sucking so much, right? We did the whole thing. You should go back and watch it. It was really, really educational. You should take notes.
I'm still a window seat person in spite of this. Just let it be known. Window seats for life. All right.
Get Pat,
bringing you on.
I'm an aisle guy. Patrick, how you doing? Happy New Year, buddy. How's it going?
Happy New Year. Doing well. I heard you guys talking about the Boeing thing and airlines, and you know what was weird about that is airlines were actually up yesterday. You know, I think over the weekend everybody saw that Boeing news, and I mean, of course, Boeing was down big, but didn't expect that reaction from the airlines.
Like the airline group.
Yeah, yeah.
Airlines rallied, right? Boeing's not an airline, right? But you would think that the airlines would get some sympathy selling. They did not.
I bet they opened at the lows.
Yesterday?
Yeah, because they were all down in the pre-market.
Not really. No.
Oh.
It opened where it closed the prior day, which was up.
Okay.
So no.
You know what? It almost,
actually opened and went straight up.
You look at like Jets or American Airlines, it almost kind of has like a little fail breakdown to it. Wouldn't be the worst here.
So Patrick, editor of the Chart Report, my favorite email of the day. What are the smart folks talking about?
I mean, yesterday it was all about NVIDIA, you know, all about NVIDIA for good reason.
Is it NVIDIA or is it NVIDIA?
What do you call it?
I call it NVIDIA.
I call it NVIDIA.
Well,
but tomatoes.
What is it, Spencer? You look like you were an English major.
NVIDIA.
Were you an English major, Spencer?
No, I just know how to pronounce things usually.
NVIDIA.
Regardless, I mean, that was a really, really important breakout. You know, I think here it is, the best performing stock of last year. You know, it gets talked about as just the best, right? But it hasn't gone anywhere for 5-6 months, and it's just starting to move again. So, you know, I think people underestimate this thing and how much it can really move. And I think there's such incentive to want to bet against it.
What's the incentive to bet against it?
I mean, to be a hero. I'm not saying it's smart. I'm just saying.
Because these are going to try to short the next big one, and so that somebody makes a movie about them.
Right. Exactly. Yeah.
This is on the can't short list.
Hey, listen though, I think there's something to that. I think there's something to the whole like romanticizing the short selling thing, and just how everybody, when that movie came out, it was almost like everyone wanted to make that hero trade.
Yeah, but Patrick, I experienced that myself because the 2008, as bad as it was for a lot of people, it was the best year I ever had until like maybe 10 years later. Crushed it that year. And as great as that might sound, and everybody told me how smart I was and how great I was, it couldn't have been, it was the worst thing that could have happened to me because for years later, I was always looking for the next one. I was always looking for the next big crash. And I struggled with that because of what you're talking about, the romanticizing of the short seller. I was going to nail the next big crash, right? And you know, it hurt me. And I remember in 2013 fighting trends were breaking down. I was like, no, it's a failed break, you know, just fighting it. And that spring of 2013 is when I finally realized not to fight trends. Who gives a shit? No one's going to make a movie about me, you know, right? Like it doesn't.
Might, JC. We don't know that.
I don't need to do that. I could just make money, and that's more important. And so because I experienced that, I could fully understand how other people are trying to be that.
Yeah.
Totally see it. You're 100% right.
Yeah. I mean, it is kind of funny. We can joke about it, but like, it's a real thing. People, you know, they want to be that hero out there.
I want to be the opposite.
What does that mean exactly?
Just making money quietly on the short or on the long side in bull markets and not looking super cool while you do it.
I like that.
Nicholas wants to see content from JC back in 2014. Email us. I'll send you some stuff.
Is it still on the blog? It doesn't go away.
It's still on the blog. There's old videos.
Yeah, every once in a while, I like to I'll Google some like technical term and I'll read an old JC article and I'll have like the Thinkorswim charts or something like that. It's cool. I like it.
Gross. Throwbacks, stock charts. Oh, gross.
Pat, we doing spaces today?
Of course.
Sick.
Spencer, why don't you drop the link where everybody could receive the daily chart report? One of my favorite emails every day.
Yeah,
Pat, you want to look at yesterday's?
Sure. Yeah, let's do it.
All right. This one's a little hard to see. Chart of the day. I don't understand this meme, and I never have. So you'll have to explain this to me.
Well, so it's really more just about how NVIDIA went from this head and shoulders top that everybody and their mother saw back in October, and it actually did pierce through the neckline real quick, but then just absolutely just reclaimed it and just ripped. I think if you go back and look, it had some sort of crazy winning streak kind of exiting that, once the Head and Shoulders was failing, and failed Head and Shoulders tops. I mean, those are some of the most bullish patterns you can have. And here we are a few months later, 3 months later, breaking out of a range, so patterns morph all the time. And I think to people who don't really understand technicals, they'll look at something like a Head and Shoulders top and they'll see it fail and be like, oh, technicals don't work. And it's like, that's not really how we look at it. We know the patterns there, and then we want to see how the market reacts to it. And, when a bearish pattern doesn't work out, when it's not bearish, you often get this kind of fierce.
Yeah, people are like, yeah, technical analysis doesn't work. Yeah, maybe your technical analysis doesn't work, but that's because you suck at it, right? It doesn't mean that technical analysis, it's like, oh, this hammer doesn't work. No, it's just because you don't know how to use the hammer, right? The hammer's fine.
Right. So I think just kind of that the 180 that stock has taken in the last few months, and like I said, it's gone nowhere in 5 months, almost 6 months. So, if you sat through the pain, you gotta hold through the game now.
Ooh, I like that.
What else do we have
I
here?
think that's actually a Kenny Glick-ism.
Question: what are the 3 best performing stocks in the Dow this year? Ready?
Ooh.
Ready?
Year to date or like trailing 12 months?
This year. Merck, Amgen, Johnson & Johnson. United Healthcare's 5th, by the way. Can someone say rotation into healthcare?
Well, hey, UNH, they got a big day Friday coming up. They got earnings coming up. Quite a few earnings.
UNH, I want to say they're on Tuesday. I think they're on Tuesday.
Thought they were Friday, but
no, they're not Friday. We have the calendar somewhere here.
Can we do recess? I want to talk about golf.
No, not yet. Are they on Friday? Oh my gosh, Pat, you're right. They are on Friday.
And you got some of the banks
that I looked at. There we go.
Did you guys talk about the Tiger Woods Nike thing yesterday?
No, that news wasn't out yesterday.
Yeah, I didn't think so.
When we did the show.
That's kind of big. I thought they might have turned that into like a Jordan thing.
Can you explain? Can you hit the bumper and then explain to me what the hell you're talking about?
You're in recess. Yeah, give me 1 second.
I have no idea what Tiger Woods has to do with Nike or golf.
All right, where's the bumper? I was talking on the chat.
So, yeah, outside of like the Jordan Nike deal, I don't know if there's ever been a bigger sponsorship deal in sports. Tiger's probably second behind Jordan. Been a partnership since almost 30 years, late 90s when he won that US Open. It's a huge line. It's similar to Jordan, but here's the difference. People don't wear Tigers. They don't talk about their Tigers out on the golf course. In fact, you're more likely to hear somebody say, hey, look at my new Jordans out on the golf course. It's still Jordan. It just never caught on probably the way that they hoped. I think they really hoped that this would be like a
So what's the news?
or a brand. They cut it off.
And Nike are getting divorced.
Done.
Tiger Woods and Nike are done.
Done.
Yeah.
Okay.
And I thought he would be one of those like transcending sports athletes like Jordan.
He was.
Yeah, but it didn't play out that way in terms of selling his merch like it did for Jordan, right? It never became its own noun, right? The Tigers, just like the Jordans are. So I think it wasn't a flop. It was good. It never really got that cool, the Tiger Woods stuff out on the golf course. And golf, somebody just asked about on and whether or not they sell golf merch. Nike stopped doing golf clubs too, probably 5-10 years ago.
You think it's because golfers are racist?
No, it's because out on the golf course,
it's a real question. That's a serious question.
No, it's a whole culture out there, and it's all about like the new trendy thing. It's not a business I would ever want to be in. It changes very quickly. Like right now, the hot stuff is like Peter Millar is really big. Travis Matthews, G4 for shoes. JC got a pair. and it just changes. Like Lulu is cool out there now. Under
Strazza's impressed with my footwear.
Nike's not. I think so. The bottom line here is like Nike is awesome. They're really good at a lot of things. They have failed golf in large part over and over and over again. I think they might just about be done with it. It's not their bread and butter. They don't need it. And again, they're competing with these smaller outlets that just continue to do really cool things. It's a tough space to be in. So that's all I got.
Yeah.
Strazza, our local golf correspondent here.
I look so good out on the golf course. Like I look like I shoot par.
I'll take pictures of you next time so you can see that you don't look good at all.
All right. My recess is just congrats to Michigan. You know, I live in the state for 7 years. Have a lot of Michigan friends and family too that went there. Congrats to our own Mary, who is a fan as well, and they earned it. I suppose sometimes cheaters do prosper, but they won. Fair and
Seriously, honestly, shout out Michigan. We have a lot of friends. I mean, I personally have a ton of friends in the state of Michigan. We have friends that went to school there.
Yep.
You know, I hate Ohio State. So, like, all good. My high school team in Miami, we were the Belen Wolverines, and our uniforms were the same as Michigan. Same helmets, the whole thing. Our baseball uniforms were pretty sweet as well. So, shout out Michigan. Much love. And by the way, as a baseball player, my whole life, when we were in the dugout, we were trying to steal signs, literally the whole time.
Yeah.
As a pitcher, the pitcher catcher relationship, we had to have our own secret code so that people wouldn't steal our signs. So if you have a problem with stealing signs, you're an idiot. It's part of the game. It's a great challenge to try to steal other people's signs. There's nothing wrong with it.
There is a line. There is a line to stealing signs. There is what is acceptable and not acceptable.
If you can steal the signs, steal them. Period.
Way over the line, right? That's as an example.
You can steal the signs, steal them.
You're talking about hardball, right?
Yeah.
Yeah, but everybody steals signs. There's nothing wrong with that. It's encouraged. Steal the signs.
They still give the Patriots a hard time about it. Belichick stuff.
Steal the signs.
They're all doing it. I agree.
Yep.
What?
Anyway, look, congrats to Michigan and all my Michigan friends and family. I'm sure they're very happy.
Washington didn't look that good, though.
You don't want people to steal your signs. Do a better job of hiding your signs.
Yeah, sure. I agree with that.
Yeah. Anyway, Pat, you got anything?
Nothing for recess, not today.
Oh.
Chart report at 1:00. Come hang out with us on Spaces
11,
at what do we do? 11 now?
11.
By the way, when we look at the internals of the market, we're stealing the signs.
Spaces at 11. Somebody asked if we're doing CRL Turbo Request Live. Yes, 1:00 right here on YouTube. If you have a request, email us questions at stockmarketmedia.com. That's what we got today. So thanks to Scott for hanging out. Thanks to all of you. Smash the like, please. Thank you. Go make some money. All right.
Adios. Go get him. Shout out.
I can't take no loss. I don't even know what it costs.